Hey guys, and welcome back to the Accumulation Zone. In today's video, we're really gonna talk all about prop firms because it's really important. We have so many options available, and it's really important for you to pick the right one that really suits you. And that's the most important part. It has to suit you. This could make the difference between you making it as a funded trader, receiving your first payout and a second payout, and the next payout after that, or failing. I have already made 4 videos reviewing different prop firms, most of the time focusing on future funding firms. So if you're interested trading futures and not CFDs, or maybe you don't even know the difference, then make sure to give these videos a watch. There are 2 different categories of funding firms. It would be the future funding firms and the regular CFD funding firm. Alright, now let's take a look at all CFD prop firms out there at the moment. And I have created this little spreadsheet. There's a link for the spreadsheet in the description box below if you're interested in reading through it on your own time. So you can check that out in the video description below. But yeah, here I summarized all types of different CFD funding firms. Only the major ones. I don't have every single new funding firm on here. Most of them are the same, and I'm also not the biggest fan of signing up with the newest prop firm just because there's some influencer you really like talking about it. And that already gets me to my first point and the first contestant for the best CFD prop firm, and that would be FTMO. Hands down, without messing around, if you are new to the CFD funding space and you want to sign up with a prop firm, FTMO is my top pick. You can never go wrong signing up with FTMO or diversifying your prop firm funding capital going with FTMO. It's never, ever a bad choice. So there's a link for it in the description box below if you want to check them out. They also offer a free trial if you just want to get a feeling for what it's like trading on a FTMO challenge. They might not be the cheapest option on this entire CFD prop firm comparison list, but by far the oldest one and the most trustworthy one in my opinion. Alright, now let's get down to the actual reason why I'm making this video. During my daily live streams where I use ICT concepts with my own analysis, making them work my way, I've been trading with future funding accounts the entire time with Take Profit Trader, Apex, Trade Day, and Topstep. But yeah, back in the days I traded with my Forex funds. They've been shut down unfortunately, and I've lost my funding there. And that's when I made the transition over to futures funding firm to avoid that issue basically. And yeah, nowadays I'm just curious because I know how hard it is for a beginner who has never passed a prop firm before or passed the challenge of a specific prop firm before, especially future funding firms. They tend to be a little bit more difficult to pass in terms of your profit target to drawdown ratio, and also they always have a trailing drawdown, which makes it even harder to pass it. That's why I'm starting now to trade with a CFD funding firm, and I want to see how well it works, how much the spread and slippage is impacting me. And yeah, now you might be wondering, which company did I sign up with? And I chose Funding Pips because I read about them, I heard only good things about them. I checked out their spreads on EU, 0.0 to 0.4 pips in spread, and on the S&P 500, the only chart that I'm trading, if you watch my streams, you know that, we have a 3 pip spread. And I compared all of these prop firms, I'm like, oh, well, damn, that spread is pretty big. And then I tested Funding Pips, and I was, to be honest, really surprised that I only saw a 3 pip spread, and it's locked in at that. And that was already a huge plus point for me because I'm most of the time scalping the 5-minute time frame and 1-minute time frame using ICT concepts. And the smaller spread I can get my hands on, the better it is for me. And yeah, that's one of the reasons why I decided to sign up with Funding Pips. Also because you only have to reach a 13% profit target before you get funded. So that's a 1.3 profit target to drawdown ratio. But we can see if we compare all of these right here, that's pretty much the industry standard. You have a 10% static max drawdown. So only if you go below 10% of your initial starting balance, you lose the account. Compared to the regular futures funding firm, it's always 5% and it's moving up with you. So if you make profit, your max drawdown is moving up with you. And I didn't really like that. And I can imagine how much harder this would be for a beginner trader to pass a challenge. So if you struggle passing future funding challenges, well, it might be worth it to try out a CFD challenge where you don't have to worry about your trailing drawdown at all times, especially if you are on a losing streak. And that can happen. There's nothing wrong about it. There's nothing wrong about you or your system if you end up in a losing streak. You just want to make sure that the prop firm you're trading with gives you enough room to breathe with decent risk management. So yeah, that's one of the reasons why I decided to sign up with Funding Pips. The other one is that I don't have to pay commissions if I'm trading the S&P 500. I have a healthy leverage of 1 to 20. It's okay for me. I don't have 20 positions open at the same time. I don't need much more. And one of the other main reasons I signed up with them is because I can withdraw my profits weekly. With FTMO, for example, at the beginning, I know they have a VIP program and all that stuff where you can actually get daily payouts. Funding Pips has this as well. But yeah, from the get-go, I can withdraw my profits on a weekly basis using bank transfer and crypto. And once I'm funded, I can receive my first payout after 5 days, compared to all the other ones where the industry standard is really 14 days, so 2 weeks. I'm also getting a refund of my initial challenge cost, and I'm able to trade on MT5, which is perfectly fine for me. I know it's a relatively new company, founded in 2023, but they're located in Dubai, and so they also shouldn't have any regulatory issues. But the main point, if you don't want to spend too much on your challenge, Funding Pips offers the cheapest challenge. Yes, they do not offer discounts most of the time. You would have to join their Discord and follow them on Instagram and Twitter, because when they have discounts, it's usually a 10% discount, and they're only active for 24 to 48 hours, so you have to be onto that stuff if you want it. And for a 100k challenge, you only pay $400 US, and that's $100 less compared to all of these other CFD funding firms, and that's a pretty good deal, especially if you get a 10% discount. But I don't have them as frequently. And if you also want to sign up with Funding Pips, there's a link for it right here in the spreadsheet or in the video description below, where you get a 5% discount automatically at checkout. And that's the two main reasons why I signed up with Funding Pips. A, because I wanted to see if there's any catch if you sign up with the cheapest funding firm. I'm just curious by nature, and I wanted to see if there's any catch with that. If I pay only $399 for my 100k challenge compared to usually $500, that's a $100 discount. And just wanted to check out if there are any strings attached to that, because I have the lowest spread on the S&P 500. I have a static drawdown. I'm trading with a reputable broker. I can withdraw my profits weekly. Oh, that sounded a little bit too good for my liking. And so far, after the first 2 days of trading with Funding Pips, I have to say I'm impressed. I don't think at this point in time that there are any downsides on signing up with them and saving a little bit of money, especially if you're not funded yet and you don't have so much capital to play with. And signing up with the cheapest funding firm, in my opinion, right now, doesn't come with any downside. You have a awesome dashboard. You can see your equity curve, your daily loss limit, and when that's about to reset. your maximum loss limit, your profit target, and how far away you are from it. You see your average win, average loss, your profit factor, your win ratio, your trading days, your long and short analysis and all that stuff, a profit calendar, and I think that's top notch. Same way as you would see it on your FTMO dashboard. There are competitions where you can compete in monthly competitions for different prices for free. There are you can request your weekly payouts. There's a news calendar section right here where you can filter for all that stuff. They have very quick support. You can also reach out to all of these people on Discord. And this morning I just checked my charts on the phone because it's NFP Friday. I didn't really want to spend too much time in front of my charts. I just checked what the S&P 500 is doing before or right after the London Open, and I saw the potential for a inversion fair value gap reversal setup below the Asia sell side. I've shared it with all the VIP members here, and I just switched apps, jumped over to my MT5 with funding pips, and I hopped in with a market order. And to be honest, I expected a worse entry with spread and all that stuff, but I got filled perfectly. No big slippage, no issues at all. I got filled and it played out perfectly well. I mentioned another entry opportunity right here in the VIP chat where I looked for a continuation setup out of this fair value gap. And same story here. I jumped in at market price. I got a perfect fill. I haven't been filled somewhere up here because I have been B-booked or slipped or any of that other annoying stuff. I have been filled right when I clicked the button without much spread at all. And I closed my position right here at the previous day's high and the Asia session buy side liquidity pool. And I have to say, I'm impressed. I cannot complain. I didn't pay any commissions. I made $500. And that's my review of Funding Pips. Currently my second most favorite CFD prop firm. It's head to head with FTMO. The only, FTMO is just with its reputation and being around since 2015. You cannot beat that. And then still 5%ers, that would be my top two. And then Funding Pips would follow them very closely because, of all these points I already spoke about. Weekly payouts, getting paid out after first payout after 5 days on your funded account. You pay $100 to $170 less compared to rank number 1 FTMO and rank number 2 5%ers. $399, and if you use the link in my description, you get a 5% discount. You have very small spreads, the smallest spreads on the S&P 500, no commissions on indices, good leverage, 13% before you get funded, 1.3 ratio, profit target to drawdown ratio. Of course, I will keep everyone up to date in my daily live streams. So if you haven't seen them yet, make sure to check out my channel. I stream live on YouTube for free on a daily basis, starting at the New York Open, so 9:30 a.m. New York local time until 11 a.m. New York local time. And for the next few weeks, I'm going to be doing that on my Funding Pips account, trading CFDs while doing my analysis on the futures chart. And if you don't know the difference between futures and CFDs, it's very simple. With futures, you trade on a regulated, centralized exchange. This is most of the time the CME, Chicago Mercantile Exchange, where you can actually buy a real lifetime data feed subscription on TradingView. And that already tells you lots. You have to sign a non-professional agreement. So basically saying you're not a professional trader. All these things because, it's a centralized exchange. You have one regulated price, ES or the S&P 500 futures contract. It's centralized. Right now it's sitting at 464.1.5, period. No questions asked. You have one centralized volume source if you are, for example, a volume trader, and you have next to zero split and slippage. If I were, for example, to place my limit order right here, I wouldn't have to worry about getting filled. I can get filled by the tick. And that happened so many times already. I'd say 80% of the times, if I place my limit order on the tick and it just hits my limit order, I get filled. If you don't believe me, watch all the live stream recordings where I do this on a daily basis, trading with future funding firms. So that's a huge opportunity. It's, I'd say, more the charts for the more professional and serious traders. This doesn't mean any prop firm traders or regular traders that trade the S&P 500 CFD contract for difference, the CFD chart. Not saying they're not professional or anything at all, but yeah, you have a decentralized exchange. It depends on which broker you're with. You can be with 8cap, Black Bull, Oanda, FXCM, Forex.com, and every single one of these brokers will have different prices, sometimes different candles on a lower time frame, which is going to make it hard for you, especially as a price action trader or a volume profile trader, to decide, well, which chart should I trust? I'm looking at the S&P 500 on 8cap and at the S&P 500 on Oanda, and two charts telling me two different things. That's the worst case scenario, of course, but I hope you understand what I'm trying to say. You have also spread and slippage with CFDs, and they're having a larger impact compared to what we have with futures. So now you know the difference. And there are future contracts for everything. There's one for the S&P 500, Nasdaq, oil, gold, the Nifty, the Dow Jones, the Russell 2000, natural gas. Right here we have Euro FX futures and the 10-year Treasury note futures contract. Whatever you want, there are so many futures out there. And the good thing about it, what I really like, is centralized data feed and lifetime data feed. No broker or prop firm that has the upper hand on you that can potentially, if they don't have your best interest in mind, B-book or A-book you for more slippage and more spread. And if you heard about that MFF fiasco or what some other CFD funding firms are able to do using the MT MetaTrader Manager application, open up spreads, increase the slippage, especially for news events, well, then you won't face all these issues trading futures because it's a centralized, regulated exchange. And that's really important. It's a centralized, regulated exchange.